Hello UPSC aspirant, I am Pratyusha, welcome to Law Excellence. In today's session, we are going to discuss various aspects regarding the new income tax bill 2025. Now we know that during the budget session, the Finance Minister Nirmala Sitharaman has been introducing a new bill regarding the income tax which replaces the 1961 Income Tax Act that's been there. Now in this session, we will discuss what is the context of the bill, what is the present scenario that is being present, different key features regarding the bill that's been there, what is the key preference or key provisions that are being provided. We'll also discuss what are the significance and the concerns regarding the bill that's been there. So firstly, when we see the context that's been there. Now recently, the Parliament Select Committee has given its report regarding the new bill into the Lok Sabha. Now what is this bill? Now this bill is been mainly aiming to have an approach, trust the payer, scrutinize. So here the first main approach that they have been going is a trust is the first one, and later the scrutiny should be there. And main aim of this bill is that they are trying to reduce and we are trying to simplify the old taxation laws that have been there. We are trying to enhance the taxpayers' confidence that has been there, and we are trying to introduce many different things, and we are trying to make a modernization of the administration that has been present, and we are also trying to improve the ease of doing business so that there will be large amount of investment that will be going on in the Indian market that is being present. Now when you come towards the different key features that are being present, first one we have here is a structural rationalization that has been there. First one we have here is the structural rationalization. Now before, the old act that was being present, it was bulkier. It was having large amount of legalized terms that have been there. Now the new bill is almost making it into half, where from 800 sections, they have been changing into 536 that has been there, which we have around 16 subsections that have been, or 16 schedules that have been present, and they have been making it into 23 sections. Now there is large amount of decrease of words has been going on, large amount of decrease of pages has been going on. Simplification is where they have been trying to bring out in the new tax bill that's been present. And second one, they are trying to eliminate complex terminologies related to the taxation law that's been there, and they are trying to remove the provisions with the subsections that have been present, and they are trying to introduce more amount of tables rather than the structured words that have been there. They are going to structured tables and structured schedules that have been present. Now this will help us in understanding the provision, the rules, the regulation that's been there. Secondly, there is a conceptual shift of tax year. Now, if you have this phenomena of going with the taxation that's been there, there are two things that will be there. One is the assessment year that has been present, and other one we have the previous year that's. To remove this confusion from this year onwards, from this taxation bill onwards, we will be having the tax year that's been there, where it will start from the 1st April and it will go till the March of the next year that's been there. The third one we have is the decriminalization measures that have been there. Now, they have decriminalized. Now, for non-filing of the returns that have been there, they have decriminalized. Instead, we have been going with the taxations that have been there. Penalty has been imposed for this, and if a criminal enforcement has been required, now they need to have a prior approval, and there are some exceptions cases have been given for the habitual defaulters that have been present. Then next one we have here is a taxpayer charter and digital rights that have been there. Now, as I told, they are modernizing the tax regime that is being present. The assets that have been there, not the physical assets, even the digital assets are being coming under the charter. And here, when the charter has been implemented, the search and all, etc., they can also search the digital that's been there, where we have digital devices, emails, and social media that's been present. Even those can be searched regarding the tax. Now, this has been included so that if there is a money laundering, if there is a black money that's been involved, it comes into the tax bracket, it comes into the tax regime that's been there. Fifth one we have is the capital gains and the deductions that have been there. There is a rationalization of the capital gains where they are redefining what is the short-term gains and the long-term gains that have been there. And we also have consolidation of the deductions under the section 80C. Now, before the old tax regime that's been there, you can have you can save the tax by different sections that have been there. Now, this tax saving is being reduced in the new regime that has been there. The sixth one we have is a presumptive tax enhancement. Now, in the previous act, the tax has been presumptive tax has been raised, or it was previously 2 crores, now it has been increased to 3 crores. And for the professionals that have been there, it was 50 lakhs, and right now it has been increased to 75 lakhs that have been present. Seventh one, there is simplified compliance and the TDS framework that's been there. Now, this is mainly for the small income groups that have been there, where if they are filing the TDS or TCS that's been there late, after the date that has been over, now they are not being penalized. No, they are just having a small amount of penalty, and this enhances for the small employers or small communities, entrepreneurs that have been there to come into the tax regime that's been present. Next one, we have the special provisions that are being present in this bill. First one is the digital asset. As I told, the digital assets that are being there, it might be virtual or it might be in the digital format, the keys, the etc. cryptocurrency that is being present. Now, all those are being coming under the tax, under the dedicated provisions are being given. Third one, we have the limited liability partnership. Now, a little bit about this. The limited liability partnership is where a company is been there, and we have different partners are being present. Now, if one partner is doing some default activities are being there, now this liability is not being shared by the other partners. Now, this kind of the tightening where it has been ensured, transparency has been there, liability is being in charge by the rest of the partners that have been there. Now, this tightening has been observed in the new bill that's been there. Then next we have the central board direct taxes empowered to frame different procedures, rules under the new act that's been there. And now when we come towards what did the Parliament Select Committee has given the recommendations. Now recently in the Parliament, the committee has submitted different recommendations. Around 285 recommendations have been given to improve regarding the bill that's been there. The major ones are the time-bound dispute resolution, greater safeguards on the digital assets. Then we have enhancing the taxpayer rights that are being present. Next, we have what is the significance and what are the concerns that have been there. The first one, we'll talk about the significance. Now, this bill has been a landmark transformation because the last income tax bill, it was being framed in 1961, that's been there. Now, we have large amount of changes that have been occurred. Income structures have been there, payable limits have been increased, deductions have been present. Now, to change and to have a present scenario, we are having the bill is a landmark shift that is being showing, where it is promoting more taxpayer friendly, where burdens of the tax has been decreased, that has been simplified nature has been given, where people can easily understand what are the tax laws that have been there, and investment conducive environment. Now, when taxes are being simplified, now the foreign investment or foreign investor, they will show more amount of interest in investing in an Indian market that's been there. And it also reflects the India's aspiration to develop a digitally driven, transparent, simplified taxation regime aligned with global standards. So this taxation regime is also having a alliance with the global economic standards that have been done. On par, it is taking the Indian income tax regime to the global standards that has been present. But here, this bill has large amount of concerns that have been there. The first concern is the privacy invasions. Now, we already know, according to the Puttaswamy case, Supreme Court has been stated that right to privacy is also a fundamental right that's been there. Now, in this bill, now the ED or the income tax officers, they are having a right to go through our electronic devices, through the emails that have been there, the digital assets that have been present. Now, it is infringing the privacy of the individual or privacy of the institution that has been there. Second one, there is large amount of ambiguity is present in the execution because certain rules are not notified clearly and they will be notified in the coming. So this will create a certain amount of uncertainty in how the rules are going to implement. And thirdly, there's lack of public consultation. So there is no public involvement or public opinions are not being considered or not being taken regarding the framework of the policy. However, when we see the tax policy or the tax bill that's been there, it has been a balance. There should be a balance of act between the privacy and the efficiency that's been there and between simplicity and the complexity that's been there. Now, based on that, the success of this act will depend. Thank you.